My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to make a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. After a last-minute push, today we took out the Dow 40,000 milestone, revealing that once again, the bears are fighting an uphill battle. Unless they can get some definitive sign that inflation is heating up, I don't see it. Dow ultimately gained 134 points, S&P advanced 0.12%, but the intransigent NASDAQ refused to play along, ended up dipping 0.07%. This market feels like a waiting game, doesn't it? Perhaps it's waiting until next Wednesday, when we get the biggest earnings report of the entire year. Or at least it's starting to feel like that. But I do not want to get ahead of myself, so why don't we go over to the game plan for next week? There's an electric report Monday from a man who is full of surprises. That's Nikesh Arora, the incomparably competitive CEO of Palo Alto Networks, PANW. Nikesh was not happy with his last quarter, nor was the street, nor was I, because my Chapel Trust owns that stock got clobbered, dropping from 366 to 266. Man, that's a clubbing. Since then, Palo Alto has changed its mission, embracing a platformization strategy, acquiring IBM's cybersecurity business this past week. Now, we own it for the Chapel Trust, as I mentioned. You know what? I am betting that this will be a better quarter than the previous one. Tuesday's got some huge quarters, starting with Macy's, which will be Tony Spring's first full quarter as CEO after being promoted from running Bloomingdale's, where he did such a great job. I am expecting solid results. Now, can Lowe's put up good numbers, even if its chief competitor, Home Depot, said do-it-yourself renovators are weak? What can you do? And that's in part because there's just not a lot of housing turnover. Lowe's is so well run and such a good place for gardeners that I think the quarter might be well received, but they do have more do-it-yourselfers than Home Depot as a percentage of the entire mosaic. After the close, we hear from Toll Brothers. Now, I bet CEO Doug Yearley talks about how home prices keep going up, but the buyers don't stop. The housing shortage is just that powerful. And those who are doing well financially, they want to buy from Toll. I've known this company since I was a teenager in Philadelphia, and I've watched them perform amazing things. Yearly will give you an incredibly comprehensive overview of the business. Now, this morning, Matthew Boss, who's the dean of retail analyst, by the way, J.P. Morgan, had terrific things to say about TJX, which, like Palo Alto, is a big position for my Chapel Trust, where you can get out your own proprietary research on the stocks that we own if you join the CNBC Investing Club. Now, I think TJX is going to do a great job, but please don't trade it. Especially don't trade it that morning, because management tends to tell a conservative, and some would say downbeat, I'd just say non-promotional story, but it throws people off. Oh, and the first move for the stock at the opening is almost always wrong no matter what. Then there's Target. Judging by how well Walmart did yesterday, I have to believe that Target could put up some pretty good numbers. Now, the growth retailers, it's classically cheap, trading at just 17 times earnings, 2.75% yield, and their stores, well, the brands that they have are legion. That's how cheap they are. Target stores have a good look right now. I think they have lean inventories, all of which points to a better quarter. Next, analog devices has been one of the stalwart industrial semiconductor plays, IoT typically, and it's worked its way higher over time. It does have moments, though, like when it reports where it lets people down. But I think that's when you have to buy analog devices, because its chips sell into many industries that are currently in bull market mode. Williams-Sonoma under Laura Albert has been such a strong company. It's the digital business, the dominant business line, and its stores and its merchandise are always fresh and joyful, which resonates with the public. Hence the stock's spectacular run from 115 to 309 in just 1 year. Albert's unassuming, non-promotional, but what she's done is just nothing short of extraordinary. By the way, it's also a testament to the power of good taste. Wednesday night brings perhaps the most important earnings report of the year, as I mentioned, and that is, yes, for Nvidia. At this point late last year, the company shocked Wall Street by offering a sales outlook that was actually $4 billion above what we were looking for. One of the biggest misses I've ever seen, which caused the stock to fly so high that it spent the rest of the year consolidating. Ever since then, Nvidia's had the most analyst coverage I've ever seen, more mind share of this market. Everyone talks about it constantly. And that's because of two trends. two trends it dominates: accelerated computing and generative artificial intelligence. Nvidia's chips are the power behind so many advancements, and other than AMD, nobody else has a product that comes close. Nvidia's going through a transition from powerful chips to even more powerful chips, which now go under the name Blackwell. And a lot of people are worried that the transition could be hazardous, because who'd buy the old chips when they know that the new chips are coming, even though, of course, they're on allocation and it'll be really hard to get. But you know what? That's what people have been doing with semiconductors my entire life. Plus, the old chips here are quite capable when you stack them up together to doing amazing things. They're not worthless. They're not they're not outmoded. In the meantime, Nvidia's roadmap is pretty darn clear. All that said, I expect some extreme volatility around this quarter. I'm not going to tell you to buy it Monday. That's too simplistic. This is no trade. My mantra remains the same. Nvidia, own it, don't trade it. Only Apple is in that same class with me. Be ready if the stock pulls back. You want controversy? I'm going to give you some controversy, and it's not Nvidia. It's Elf Beauty, ELF, the maker of inexpensive makeup that's taken the world by storm. Many skeptics think this stock has peaked. We frequently have the CEO trying him in on the show, and I think that Elf has done, it's got a lot more upside. And Amin was the one last time, and I just thought he told a fantastic story. Look, they only have a small piece of the cosmetics business, and I've been recommending it. Others have been shorting it. They will be wrong. Two controversial names report that night, too, Snowflake and VF Corp. Now, both have new CEOs. Sridhar Ramaswamy took over from the legendary Frank Slootman at Snowflake, and you know what? I'm still not sure exactly how the company's doing. There are reports that he's about to do a major deal with a startup called Reka AI for more artificial intelligence exposure. That'd be good. VF Corp's run by Bracken Darrell, late of Logitech, and he's still trying to get his arms around that mess. He inherited it. Not his fault. But it could be the quarter where he lays things out for the future. And look, I don't know, it might take a little bit longer, but I like him. Let's see if we can like the company. Thursday morning, we hear from the apparel company that's producing the best numbers of late, and that's Ralph Lauren. CEO Patrice Louvet has been able to reach younger generation, using them with a lot of really, I'd say, fashion-forward ads. How about that? And he's converting them to a great brand. Last time he reported a terrific quarter, but it took a couple weeks for people to realize how good it was. The same thing could happen again. Now, one of my favorite medical device companies is Medtronic. They also report in the morning. It's been getting a lot of approvals that I think can lead to big numbers. I may be early, though. Boston Scientific's the current favorite. But this one's turning into a winner. After the close, we get results from the footwear champ, which is Deckers. They own Uggs, which we all know. But they also own Hoka, the hottest athletic shoe. Save maybe On, which is symbol on. I expect still one more great quarter from Deckers. People have been betting against it. I think that's ill-advised. Now, one of those consistent fintechs is going to report on Friday, and that's Intuit. Now, they own QuickBooks, MailChimp, Credit Karma, and TurboTax. I think Intuit had a great tax season. Small businesses just can't stay away from the QuickBooks. Finally, Ross Stores, an off-price chain like TJX, should also deliver an excellent set of numbers. The frugal consumer loves them both. And there's room for both of them, I think, as far as I'm concerned. Plenty of room, because that is exactly the segment that we find more people in than ever. The bottom line, lots to love next week. But look, for many, it's really just going to be about Nvidia. I'm not kidding anyone. I just hope we clear out the short-term traders for Nvidia and end up with a more reliable, steady, believing shareholder base. Let's go to Trey in Texas. Trey.
Jim, for 50 years, Oscar Mayer has claimed they have a way with baloney. And to my knowledge, no one has ever publicly disputed this until now. My question is twofold. First, as Kraft seeks a buyer for the brand, does private equity find value, or do they call baloney? And second, would a potential sale be good or bad for Kraft Heinz shareholders?
Okay, this is a great question because it's such a storied brand. But storied brands aren't going for a lot of money. Why? Because they're not considered to be fresh. They're just storied. I'm not saying they aren't fresh, but they're not considered to be by Wall Street. You're not going to find a lot of Oscar Mayer in Whole Foods. Therefore, I'm going to tell you, I think it's not that important. And Kraft Heinz, by the way, has a lot of products that I think are not that important, which is why I haven't recommended that stock in ages. Doug in Alabama. Doug.
Hey, Jim.
Doug.
Hey, Jim, I think I'm open up a position in Pfizer. What do you think?
I like Pfizer here. It's making a big turn. People don't even seem to be aware of it. I've been talking about it every day in the office. I keep saying, has anyone watched this turn in Pfizer? 5.8% yield. I always like CGM, which is the old Seattle Genetics. I think Dr. Boiler's got it right. They have a lot of cash. Yes, Pfizer is a buy. Let's go to Dave in Massachusetts. Dave.
Hey, Jim, it's
Big Bucknell Booyah from the class of '69.
Well, you know my wife's on the board of Bucknell, and she'll do anything for that great school. How can I help?
Under Armour. How's it? What's your call there? I know you.
Look, I am a huge supporter of Kevin Plank. I am not a huge supporter of the stock, and the reason is because there's nothing more competitive than that industry. I bet you if Kevin had chosen another industry, he'd be crushing it. But you're up against Nike, you're up against Hoku, you're up against New Balance. I mean, these are just serious competitors, and you got to be on your game every second. All right, look, there's a lot to like in the companies reporting this week, but for many out there, it's all about Nvidia. Nvidia, own it, don't trade it. Mad Money tonight, I'm bringing you a powerful story about how AI is being put to a groundbreaking purpose, featuring Bill Nudie and Everything ALS. That's an organization. Then, could tough times be brewing for this market? I don't know. I'm going off the charts to see how one technician says we ought to be a little more wary. And don't miss my homework on a former meme stock that's had a huge run-up that is worth exploring. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.